Hello and welcome to Smart Money. Joining me today is Andrew Ludwig, and he's the co-founder and CEO of Currency Hub, and not his first time in conversation with us. So, Andrew, I'm going to get straight into it because while we have spoken about cryptocurrency arbitrage before, for those who missed it the first time round, let's start with a quick refresher here on what cryptocurrency arbitrage is. Essentially, leveraging the inefficiencies of capital markets to create value, right?
Absolutely. Thank you, Alicia. So arbitrage is a fancy word, but it's existed in front of our very eyes for millennia, whether I'm taking out into price inefficiency buying oranges or cell phone data or crypto arbitrage. So in our case, what impacts these arbitrage? What is an arbitrage? Well, it's affected by regulation, price points, volume, demand, data, technology. We take advantage of various points of that. So in South Africa, there's exchange control that limits South Africans to investing 10 million rand abroad each year, plus the 1 million rand single discretionary allowance. Companies may not invest directly in crypto because of exchange control. So the regulation has created an opportunity in as much that if I purchased $100 worth of Bitcoin or stable coins right now in the USA, and I simultaneously sold it here in South Africa, on this very day, I would sell it for $102.26. $102.26. So 2.26 is the current premium today. That is the profit. That is the arbitrage. So we take advantage of the inefficiencies using technology and all of our financial services licenses. And we've been doing this successfully without fail since 2017.
Yeah, and since 2017, innovating all the time, right? You've recently announced a new highly competitive solution, which you say can increase a client's profits by anything between 20 to 50%. And I've said this to you before, right? You know what they say when it comes to things that sound too good to be true. So what exactly are you putting on the table here? How are you achieving that kind of return? And who exactly are you targeting?
Let's address the too good to be true point right up front. We've been doing this since 2017. I've been front and face of the media, the regulators. In fact, we've become even more regulated over the last several years. It's here. Arbitrage is very much in your face. It is too good to be true, but I really urge everyone to have a look at it and select out how we do it. So what's the good news? So historically, we would be using banks and the SWIFT transfer fees, which typically trend at 500 Rand per transaction. Now, in the event that you're trading with 100,000 Rand, you would need to do 100 trades to get through the full 10 million Rand annual allowance. Those 100 trades would clock up a fee of 50,000 Rand. 50,000 Rand in SWIFT fees. Those are coming directly out of your profits. So the innovation, which I don't take credit for, the thought process that has included many minds and a top-tier bank, and the solution is essentially batching the clients into a single SWIFT, the benefit of which is I might put 20 or 200 clients into a single trade, all of whom go through for 500 Rand or less. So cutting out the individual SWIFT fees has a material impact on the profitability of doing the arbitrage. And it's so important right now because we are would like to take a low premium environment, but there's still lots of premium, trended around 2 to 2.5 year to date. And our clients are typically coming out with profits of about 150,000 Rand off the single principal. And you start sharing that with your spouse if you're married, that 300,000 Rand coming out of 100,000 Rand initially invested, we will improve those profits through the usage of a single SWIFT strategy.
Okay, so let's stack that up against, some of the performance we've seen in the broader market, right? Because during the recent cryptocurrency boom, investors holding major crypto like Bitcoin, for example, experienced big gains there as well. So, how did the boom compare to that? What kind of impact did this have on the cryptocurrency arbitrage space specifically?
Yeah, very good question. So Trump basically pushed a whole lot of things into motion. We saw Bitcoin rally, we saw gold grow in strength. Markets have done exactly what we've seen. doesn't bode well for the arbitrage, because suddenly Bitcoin's reaching 100. Now a whole bunch of people are holding on to it and thinking, are we going to sell it? So at those high prices, we saw the premium being suppressed, trending at around 100 and 1.5 and below. Now, fast forward a month, we've now seen a bit of volatility in the market, and that rand strengthening coupled with BTC jumping between the early 90s and 104, for example, opened it up. So we see the premium for December trending at around 2.2, 2.3. These things should level out. January will bring in a new wave of investors, but we obviously watch the larger crypto market very carefully.
Yeah, I highlight, those two kinds of gains being noted, as far as cryptocurrency arbitrage is concerned, and then cryptocurrency itself, because it begs the question, when should an investor, Andrew, invest using cryptocurrency arbitrage, and when should an investor just buy and hold a cryptocurrency like Bitcoin itself instead?
So we've always advocated that this arbitrage process is the neat means of individuals being able to accumulate some profits and invest in crypto, rather than taking out individual investments out of their equity portfolios and messing around with their financial advisors' suggestions. We take the profits from the arbitrage and we potentially go and build your own crypto portfolio. But let's consider the numbers here. With 100,000 Rand, noting our minimum investment because of the single batch is 50,000. But 100,000 Rand in a traded out should be making, guys, around 150,000 Rand per annum. Now, that's a material return on 100,000 Rand. Now, if you're sharing that 100,000 Rand with your spouse, the interspousal loan, which is how we trade really efficiently, that's 300,000 Rand profit for the household. Bitcoin, if we look at since inception, over its circa 15 years, has made just over 100% annualized returns. If you look at it in the last 3 years, it's closer to 60% annualized returns. Either which way you look at it, the arbitrage materially outperforms Bitcoin. So you've got to have a view. Do you think Bitcoin's going to do way better returns than an arbitrage? This is kind of almost like bird in the hand stuff. Not that we guarantee the arbitrage, not that we guarantee the premium. It is something that will disappear over time. But I would advocate for doing the arb using your capital that is tied into a bond, money market that's making 7%, put that through the cycle, make yourself 100 to 300,000 Rand in that year. Those profits may become your gateway into investing in crypto. And that would be a diversified strategy in my view.
Yeah, and as you alluded to as well, it works to limit the impact of the cryptocurrency variance, that comes into play as well, and the kind of volatility we've gotten used to and familiar with when it comes to the cryptocurrency market scene. As far as crypto regulation goes, Andrew, what's your take on South Africa's regulatory landscape itself? I mean, is it sufficient, prohibitive? Are there areas where more regulation would be valuable?
Lisha, as you know, we've always been huge advocates for regulation, and it serves to everyone's benefit at the end of the day. Yes, there's a community of Bitcoiners who are in the space because they don't want to be regulated, but they can be very grateful for regulations like that seen at the SEC that ushered in the BlackRock IBIT Bitcoin ETF, the fastest growing ETF in the history of ETFs. So that's why your Bitcoin's at $100,000 right now. It's because of regulation. So bringing it closer to home, full kudos to the FSCA. They've done a huge job in getting, I think last count, around 250 CASPs, crypto asset service providers. These are financial service providers, the FSP, who've gone a step further to apply for a subcategory CASP license in order to participate in crypto. So that's had an impact on the arbitrage. We've seen less people who are doing this in an unregulated fashion. They've left the party as such. So that's good for the arbitrage. It's good for the consumer. The consumer now has a protector. If I do something awry or nefarious, my clients can go to the ombudsman at the FSCA and call us out. And penalties are being distributed to anyone without the correct licenses. I think importantly in our space, Crypto arbitrage requires the Category 2 FSCA license. This is an asset management mandate, discretionary mandate, that allows us to perform our arbitrage in such a way that we can demonstrate a successful track record of zero loss returns since inception. There are other Cat 2 licenses out there, and look a bit deeper. There might be CASP Cat 2. Do a bit of work on the individuals there. They're licensed nonetheless. What is their familiarity with macro markets, global risk?
So, Andrew, you've highlighted some of the safeguard parameters that have been put up, right? But how exactly do investors go about checking in on valid licenses? Which crypto players are in fact authentic and which ones to avoid?
Isha, this is the scariest point of our particular industry. 80 to 90% of the crypto stuff out there could be deemed fraudulent, scandalous, nefarious. So where is the 10%? How do you identify the 10%ers in this regard? Well, the regulations that we've discussed earlier would suggest that I, as a crypto service provider, need to reference my FSP licenses. You can go onto the FSCA website and you can search that I actually am who I am. There are so many scams, and the guys are just getting better and better at these scamming. So just be vigilant in terms of, like, if you are being approached by someone from a Telegram group, that's immediately suspicious. A WhatsApp group pretending to be some famous personality, whether it's Elon Musk or another member of our crypto community. These are the too goods to be trues. You need to identify that. Do your due diligence. Check on the websites. If the websites have got things that look a little bit too flashy, are they riddled with spelling mistakes? Is there any reference to a FSCA license? That would be the absolute go-to. Be vigilant.
Absolutely. So, Andrew, as we wrap things up, what excites you most about the cryptocurrency industry as we move into 2025?
Sure, it's been a hell of a year, and certainly for everyone who's been holding tight, waiting for Bitcoin to get to $100,000. Could it go to 200? That's mere speculation. I'm excited because regulation is ushering in new products, and this gives us an opportunity for more participants to get access to crypto, and not just crypto, to blockchain and to all the exciting projects that are enabling this entirely new wave of investments. BlackRock recently suggested to their investor base between 1% and 2% of your portfolio should be allocated to Bitcoin. Sure, they're talking their book, but this echoes a very similar stat that the CFA Society announced a couple of years ago, talking 1 to 5. So I think the regulation allows financial services to participate with financial advisors in a regulated environment. Ask your advisor.
Andrew, let's leave it there. Always a pleasure catching up. Thanks so much for having joined us in conversation today. Andrew Ludwig is the co-founder and CEO of Currency Hub.